Hello, welcome back to my channel. If you are new here, my name is Layla, and in today's video, I'm going to share a few beginner investor mistakes. When it comes to investing, we are all beginners at some point, and hopefully you begin investing and are able to avoid mistakes, but many of us make those mistakes. There's even some people who are not new to investing and they still make these mistakes. So if you are brand new to investing or fairly new to investing, then there's a few things that I'm gonna go through in this video for you to watch out for. And if you avoid these mistakes now, you will be better off in the future. Mistake number one is buying individual stocks. This is actually a mistake that I made back in 2018. Now, before 2018, I did open a Roth IRA. That whole process in and of itself was a mistake, which we will talk about. But aside from that, I decided to start investing on my own. 2018 is really when I started learning about finances and getting more into things. That's when I started my debt-free journey. I didn't even know about the FIRE movement or anything yet, but I had heard about the app Robinhood. So I downloaded the app. I think I was referred into the app, so I got like a free stock. I think they still do that. Like if you use somebody's referral link, you get a free stock or a couple of free stocks. And I don't remember what that free stock was, but from there, I remember I put in maybe like $100 and I started buying individual stocks. I actually can look back on what I purchased. I don't know if one or a couple of these were like part of the free stock that I bought, but I don't know what I was buying. I see that I purchased Redfin, ACB, CRSP, MNGA. I have no clue. At the time, I think I had like done a little bit of research on them, like just quickly Googled them and probably saw something about like, this has great growth potential. And with my little $100 that I put in there, I was purchasing like one share of each of these. So they were like $28, $32, whatever the case was. And that's something, looking back, that was definitely a mistake. Luckily, I didn't put a ton of money in. I eventually sold these stocks. I don't have anything invested in Robinhood. Robinhood as an app is okay, but that's not the app that I prefer to invest through, but I know there's many people who use that platform. But the problem really comes down to purchasing individual stocks. There are some people who can do this and be successful. Those are typically people who are day trading, so they are trading as a living and spending a lot of their time trading stocks. There are some people who also like to purchase individual stocks because they are passionate about that company. Like for example, some people own a ton of Tesla because they really like Tesla, or they own a ton of Apple because they really support that company. So they do purchase an individual stock and make that a part of their portfolio. But even with a situation like that, it's just something I would not suggest for a beginner. When you're purchasing an individual stock, you are not diversified. And if you just continue to pick and choose, or you're only investing in a single stock, you risk losing more of your money. Instead, I highly suggest for beginners and just anybody who's investing to invest in index funds, mutual funds, and or ETFs. So basically, you would choose what sort of account you want to open. If you have your 401k through your employer, that's fine. You can choose your investments through there. That typically is going to be index funds just out of the box. But outside of that, let's say you're opening a Roth IRA. You would open your Roth IRA, which keep in mind, this is just a retirement account. That's not an actual investment until you invest in funds. And once you have that Roth IRA and you put money in, you can then purchase those funds. So this is where the VTSAX comes in, the VOO, the VTI. Those few that I just listed are relevant to Vanguard, but if you have Fidelity, that could be like the FXAIX. So whichever platform you are using, I highly suggest looking into index funds or ETFs that involve the total stock market or the S&P 500. And when you put your money into these, you are either purchasing a whole share or you are purchasing fractional shares of these ETFs or index funds. And these have multiple stocks within one. So with the total stock market, you are looking at over 3,500 stock within that one index fund or mutual fund. And then with the S&P 500, you are looking at 500 stocks. The S&P 500 tracks 500 publicly traded domestic companies. So this is within the US, and these are larger funds. This is going to be your Apple, this is going to be your Microsoft, this is going to be your Tesla. 500 large companies are within this fund. So naturally, if you are just purchasing one share of the index fund or ETF, you are automatically diversified. You have 500 different stocks that you're invested in, or 3,500 if you have the total stock market. And if one of them, if any of those 500 fall out of the S&P 500, it is replaced by another company, which is really important because if you instead only had, 300 shares of Tesla, but Tesla went down, all of your money would be gone. Of course, definitely do your own research, but honestly, I'm a firm believer that you cannot go wrong with the total stock market or the S&P 500. Mistake number 2 is investing with the wrong platform. And what I mean by this is where you actually open your accounts, your Roth IRAs, your brokerage accounts, your traditional IRAs, etc. I kind of mentioned this with the last one that I was talking about, but when I was younger and when I first opened my Roth IRA, I was advised incorrectly with a lot of my finances. And one of those things that I was advised on was to open my Roth IRA with State Farm. And I lost quite a bit of money because of that. Nothing crazy because I didn't have too much in my Roth IRA, but I was with State Farm, and I think it was like RBC Wealth Management or something in the back end. But my money was not growing. I was paying I don't know what in fees. The website was really confusing. I didn't have easy access to that account just because I went through State Farm. I don't know. It was very confusing and I didn't have control of it. And that's definitely just a beginner investment mistake. Like, I was listening to other people who I should not have been listening to. There are many platforms where you can begin your investments. Personally, I really like Vanguard. I have a brokerage account and my Roth IRA with Vanguard. Fidelity is another great option, as well as M1 Finance and Charles Schwab. There are a few others out there, but those are like the top 4 that I would consider. And for what it's worth, if I was to give advice to, somebody just starting out with investing, I would suggest those 4 platforms. I have received video requests to create videos on like how to open a Roth IRA with Vanguard or with Fidelity, and that's something I do really want to do. I'm trying to figure it out though, just because I already have those accounts. So in order for me to like share my screen and document, I wouldn't be able to, just because one, there's a lot of like personal information you have to put in, and I would only be able to get to a certain point. So yeah, I will eventually make those videos and help to walk you through them. But there's also a lot of resources out there. Like, if you go to Vanguard's website and say that you want to open an account, whether it be a Roth IRA or a brokerage account, they will walk you through that. So I can put the link down below in the description box where to start with that, but it should be pretty straightforward. And the same goes for Fidelity, Charles Schwab, and M1 Finance. Mistake number 3 is that your funds are not actually invested. And I have seen this quite a few times, and it is so upsetting. I've seen it personally. So somebody that I was working with, a client that I had a couple of years ago, her Roth IRA, her money was not invested. Luckily, it was not too much, so she was able to take care of that and, probably just lost like a few $100s worth of growth. However, I have heard horror stories of people having like thousands, tens of thousands of dollars, quote unquote, invested in their Roth IRA or whichever account, but it wasn't truly invested. So when you have an account like a Roth IRA, you also have a settlement fund or a money market account that goes with that. And typically when you're first starting out, you would put money into that. And that settlement fund is like a holding account. So that is not actually invested. A Roth IRA is not an actual investment. This is just an account. It will hold your actual investments. So you would need to purchase those funds that I was talking about. So if you want to purchase VTSAX and you have $5,000 in your settlement fund, you need to make sure that you actually make that purchase. You will see like that you now own X amount of shares. Then you know that your money is truly invested. Something to look out for if you're not sure if your money's invested or not is if it's moving, if the money that you've put in is going up or down. So if you've put in, $5,000 and it's still at $5,000, then it's probably not invested. There should be fluctuations in that account, just like the fluctuations with the stock market, on basically a daily basis. So if it's staying the same, then definitely check on that and get your money invested ASAP. Mistake number 4 is buying based on trends or what other people are saying to do. Now, I know you're watching this video and you're like, you're telling me what to do. But what I mean by this are like those meme stocks, or like the things that get big on Reddit. So this would be like the Dogecoin. This would be like AMC a couple of years ago, or GameStop. If you go and look at the 5-year history of these, you'll see a huge spike back in 2020 or 2021, whenever it was. And it grew so much because so many people were purchasing this stock because of a thread. But now, if you look at the value of that stock, it has dropped significantly. I know that those things can seem really exciting. There are people who find success from, they purchased a bunch of Bitcoin and then everything exploded and they sold it. So now they're a millionaire. Same with Dogecoin. But that is extremely rare, and those individuals just got lucky. They happened to purchase at the right time, and then they happened to sell at the right time as well in order for them to reach that status. But you probably will not be able to replicate that. People have tried to replicate it and end up losing thousands or tens of thousands of dollars, and you do not want to be one of those people. Same goes with people around you. Like, you may have a friend who like swears that they're killing it in the investment game, like they're constantly buying and selling stuff. And you really got to be careful with those people because they're going to make it sound really intriguing. But honestly, your safest bet is just the index funds, ETFs, and mutual funds. With time and more money, you could expand your horizons and see what else you would like to invest in, like maybe some REITs or something like that. But overall, I really hate to see an investor purchasing things just because they saw it trending on Reddit. Mistake number 5 is selling your investments when the market is down. It can be really hard to see your investments go down, but that is normal. Let's say that you put $5,000 into a fund and the next month it's down to $2,000. Now, assuming you put this money into the total stock market or the S&P 500, something safe like that, your money should be fine. If you purchased all of the same stock, that's a different story. But if you're investing in the right things, but your investments happen to go down, this is because the stock market is down. This is normal. It's going to fluctuate, and you do not want to pull that money out. You do not need to panic. If it does stress you out, I would just suggest you avoid looking at it. But this is completely normal. You will put in $100 and the next day it could be down to $50. But this is the perfect time for you to continue investing into things like the S&P 500 because you are actually able to purchase the shares at a quote unquote sale. Each share is at a lower purchase point. So in 5 years, when it increases by, 10%, 12%, 15%, your money, your shares that you bought at a discount are going to be much higher. And you're truly going to thank yourself for making that purchase and just sticking through the discomfort. So if you see things starting to go down, that is okay. Just relax, let it go. Within a couple of months, within a few months, or within a few years, you will see that that money will grow as long as you're invested into the right things. If you go back and look at the history of these investments, the index funds, the ETFs, you will see that it's completely normal to see fluctuations. It's going to go up, it's going to go down, sometimes really dramatically, but it will always recover. And the final mistake to avoid is trying to time the market or even thinking that you can time the market. If there's anybody who is saying that they're timing the market, then they are lying or they have a misunderstanding of what that actually means. Your safest bet is to just continue investing on a consistent basis. So for example, if you have your 401k or some other retirement account plan with your employer and you are contributing to that on a bi-weekly basis or a weekly basis, that's perfect. You want to consistently keep investing in that. You're not going to try to sell anything because you think it's the best time to sell. You just keep investing into that. And if you keep doing that month after month, year after year, you will see you're going to increase your net worth significantly. Same goes with anything else. So if you have your Roth IRA and you put in $500 every month, keep on doing that. So right now, if I look at the cost of a single share of VTSAX, the total stock market index fund with Vanguard, it's about $105, $106. You don't need to watch every single day and be like, oh, now it's 102, I should buy that. Or it's 108, now I need to wait. Just purchase it. You don't even need to look at the price of it. If you are in this for the long term, which most of us are, almost all of us are, because this is money that you are investing now so that you have money in the future, then you do not need to worry about looking at the price of things when you're actually making a purchase. There have actually been studies showing people trying to time the market and how it just does not work out. So there's the person who is investing on a consistent basis. Maybe that's like the first of every month they're putting in $500 and they just keep on doing that for several years. But then on the other hand, there's somebody who is investing a large chunk of money and trying to time it, so purchasing when the value of a share goes down. And in the long term, if you look at the results from both of those people, there's like usually no difference, or the person who is just investing consistently and not worried about timing is better off. And this is good because you'll not only be better off financially, but just mentally as well. You're going to save time, you're going to save mental energy. Like once you have the right platform that you want to be investing in and you are comfortable with using it, great. Next decision is determining what you would like to invest in. So like I said, total stock market, S&P 500, whatever you're comfortable with. And you continue doing that month over month, year over year, you will find yourself in a great financial situation years from now and decades from now. Yeah, those are the handful of mistakes that is very common among beginner investors and even sometimes more advanced investors. Comment down below if there is anything that I missed out, or maybe something that you made a mistake on in the past when it came to investing and would be helpful for people going through the comments. Otherwise, let me know if you have any questions. Thank you so much for watching, and please give this video a thumbs up and subscribe if you haven't already, and I'll see you in my next one.